Can you get 12% distributions from U.S. Treasuries? We're going to find out today. Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy, and today we're taking a look at a unique option income fund built on U.S. Treasuries. The Amplify TLT U.S. Treasury 12% Option Income ETF, the ticker TLTP. I found this when I was doing some different research into some higher yield funds. And I found this and thought was very interesting. So I thought we'd share the information that I found and work with you across the board. Let's get into today's video. Notice to all viewers, this video is for educational and informational purposes only. This is not financial advice, and I'm not suggesting that you buy or sell any investments, as I am not a financial advisor. Past performance does not guarantee future results, and the data here is based on information available as of the time of the recording. All right, after that, let's get into the full presentation. So first off, TLTP launched in October 29th of 2024, so about 13 months into this, and currently holds just under $24 million in assets. Its total expense ratio is 0.38, and it tracks the Bloomberg U.S. Treasury 20-plus year Premium Covered Call Index. In simple terms, TLTP is designed to generate income by holding the long-term U.S. Treasury ETF, TLT, and then laying on a weekly at-the-money covered call option strategy. The fund rolls these options every week, collects premiums, income, and distributes that as income monthly. This is a rule-based strategy designed to target an analyzed 12% in option income potential, but actually results can be higher or lower depending on market conditions. So here's how TLTP's process really works step by step. Step one, the fund buys exposure to the long-term U.S. Treasury bonds, primarily through the TLT fund, ETF fund, from iShares. Step two, it sells weekly call options at the money, targeting a 12% annualized premium income stream. These are covered calls, meaning that they are backed by the TLT shares the fund holds. Step three is every week, the fund rolls these options into new weekly contracts. It keeps the option income consistent with market conditions. And four, TLTP distributes the income monthly, which includes the option premiums plus any underlying income from TLT itself. The process repeats continuously, giving the ETF 4 opportunities each month to collect option income. All right, let's talk about the strategic benefits of this kind of an approach. First is that income focus. The strategy targets an analyzed 12% of option premiums. And remember, this is targeted, this is not a guarantee. The second is the total return potential. While the fund caps upside because it sells covered calls, it still holds long-term U.S. Treasuries and maintains exposure to their price movements. The third, the more frequent premium collections. Instead of monthly options, TLTP uses weekly options, which means 4 times the opportunity to collect income and adjust to market conditions. That can help with consistency and the risk management across the board. Finally, the fund provides an easy access, one ticker, simple structure, and a straightforward mechanics. Now let's take a look at the performance numbers. As of December 3rd, 2025, this is the snapshot that we have taken. The fund's natural growth is down 4.85% year to date. When we take a look at the year-to-date yield, it's at 12.38%. That gives us a total return so far year to date of 6.04%. These numbers reflect how the income component helped offset some price declines in long-term duration treasuries. This is purely historical data and not a forecast or a future performance. But we can see that the 12% yield, it achieved its goal, but because of the loss in growth, our total return is half of of the yield. Now we'll take a look at the distributions, and you can see the distributions at 12.32% and an SEC yield of 4.2, and distributions are paid monthly. Now this is important. On November 30th of 2025, the distributions included an estimated 68% return of capital. Now, return of capital, or ROC, simply means that part of the distribution is considered non-taxable now and reduces your cost basis. This video isn't about tax advice. It's always consult a professional for this situation. But the distribution amounts in 2025 has ranged around 23 cents level per month. Again, distributions may vary depending on market conditions and option premiums. When we take a look at the fund holdings, as of December 1st, TLTP is primarily allocated into two positions. The TLT, which is the iShares ETF, 67.93%, and long-term dated U.S. Treasury bonds at 31.67%. There is also a very small short call option position. That's the covered call being sold at TLT exposure, which is what generates the income. This is a very concentrated, rules-based strategy. So if you like simplicity, TLTP keeps it extremely straightforward. Now we got to talk a little bit about risk factors. As with any investment, there are always important risks to understand. Covered call risk. The fund gives you the upside because it sells calls. If the TLT rises above the strike price, gains are capped. Interest rate. Treasuries fall in price when rates rise. Like TLT, the TLT and TLTP is exposure to those rate movements. Non-diversified fund risk. Because this isn't a broad basket of holdings, price swings in the underlying assets can have large impact. And then the underlying ETF risk, since TLTP uses TLT heavily, it inherits the risk associated with the long-term government bonds. And return of capital risk, which means some distributions reduce cost basis and could affect future taxes. Understanding these risks is key to knowing whether this type of strategy fits a personal goals. So in conclusion, in summary, the Amplified TLTP ETF gives investors a simple and transparent way to access a widely covered call strategy on long-term U.S. Treasuries. It provides a target of generating consistent option premium income, monthly distributions, weekly rebalancing for more responsive income generation potential, and straightforward exposure to long end of the Treasury market. And again, this is an objective-based strategy. It's not a guarantee of performance or income. Always do your own research and consult a qualified financial professional before making those decisions. If you found the walkthrough helpful, hit that like button, hit that subscribe button, drop us a comment. Do you think that this fits in your structure, in your portfolio? So give me some insight. What do you think about this fund that we found? If you like it, we're going to keep looking deeper and deeper. If not, we know we can move on.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.